Hey everyone, thanks for joining us. We are the Hatch Homes Group, and this is our weekly market update. And today we are going to talk about interest rates. That's the buzz of the market. And before we get into it, if you are liking what you're seeing, you can subscribe. Please like and share all the stuff that we know at this point. So let's get right into it. The interest rates have gone up. There's people saying, is this going to kill the market? We're seeing effects immediately in certain areas. And so we're just going to dive deeper into that.
Yeah.
So let's look at interest rates.
Yeah. Check this out. From December 30th to the end of March, there was over a 1.5% increase in interest rates. And actually, this is a couple weeks old, and we're sitting at the low fives now. And
yeah, we broke the 5, people.
That's crazy.
Yeah, however, when we look back a bit further, we can see that 5% interest rates aren't that dramatic. As just a few years ago, we were a little bit higher than we are right now. And of course, if you go back further, you can see dramatically different interest rates. But
yeah, we love all the parents right now that are telling their kids, stop complaining. It was 11 or 18% when I bought a house.
yeah.
Right. You know, we don't want to get there again. But yeah.
This graph, just so people at home can know what we're referencing here, this graph is going all the way back to 2016. So you can see that those were like hovering around 4, and then in the middle there, that's like 2019. So we're approaching the 2019 rates. It's not even that long ago. I think that another immediate impact that we're seeing right now is how this is affecting buyers and sellers in the market, mostly buyers, right? Because that's changing your purchasing power. We've said it before, we'll say it again, excuse me. 1% interest rate can change your monthly payment up to 12% difference more. So really, it's not affecting the higher end buyers because they have the money most of the time. They have 20% down. And so the rates are really going to be doable for them. But it is really asking buyers in the lower end, like with not as much budget, with not as much down payment, what their monthly payment's going to be. And so they're just kind of readjusting their expectations and what they really want and what they need. And they may have to take a little bit of a pause and see what they're really wanting. And is the point to get in a house so you can have that equity and build that wealth for yourself? Or is it some other reason that you're buying? I think it's important to look at what you expect to get for your money when you're in that lower end as well.
Well, and some don't have a choice because a lot of lower end where they were already like stretching to the max just to get into something like at the lowest they possibly could. And now it pushed them to a point where there isn't really anything in their budget. So they're going to have to really like set up a new plan to get back in.
Right. And
One thing I'm aware of coming on off a road trip to the Mexican border to here, I'm very much aware that Portland is the cheapest major city for real estate on the West Coast. Seeing what's happening in San Diego.
So will that push more people up? I mean, it could. We've already had a huge, but it could just be like that one little extra push. Got to get out.
Right. And that's interesting. It brings us to this graph that John pointed out.
This is the big message we've got to share. Freddie Mac have analyzed when we've previously had increases in interest rates. So there's 5 periods here where we've had increases over 1%. And Freddie Mac have looked at that, how that's affected the market. We can see that in every case, home prices continued to appreciate it. There was no dive. We have nothing in the history to show negative impacts on home price. However, sales have in some cases been affected, and we can understand that.
Yes.
Another interesting thing from this slide, we can see the months of inventory there. far in excess of what we've got right now.
Yeah.
Last month, we had a drop down to 0.7 months of inventory.
It's kind of cool that on the 05 to 06 is the only year that's like the drastic, home sales. Every other period, it was actually kind of relatively low.
Yeah.
Well, and that's what was leading up to the
Yeah.
Great Recession. So
Yeah.
it's interesting. You're right. Like to look at the numbers and see them.
Yeah.
Like
Yeah.
that.
Well,
And it also answers the question are the interest rate hike going to kill the market?
yeah.
Likely not.
Yeah, it'd be interesting to see if home sales were maybe down like 2 or 3% or something lower. It'd be interesting to go back.
Just a couple of things I wanted to say, a couple of promising things that are happening. Like we look at last month's RMLS stats. We saw a 37% increase in listings from the month before, and that's the second highest amount in 2 years. So it was the highest increase in listing for 2 years. And also the national statistics for home building, we're seeing home building, which has been very low, has got up to where we historically expect it to be. So we're seeing more.
Hallelujah.
Yeah, that's good. We needed that. We need that more.
So we've shown this sort of graph in previous videos, and it shows that what the leading economist thinks going to happen to prices. They vary quite a bit. You see an average 6.7% increase in prices expected for 2022. Nowhere is anyone predicting drops in pricing.
It's the prices are going to go up, but not as much as they have been. Probably it's going to start even out. We've been saying that for a while.
Yeah. And this is an interesting graph because it shows everyone's concerned about inflation right now. We are seeing record inflation, as is happening all over the world. But when you look at the blue bars against the green bars, the blue bars are the inflation rate, the green bars are the home price appreciation rates. And we can see, especially in the recent years, that home ownership is a fantastic hedge against inflation because home ownership rises are far exceeding inflation rates.
Which is why we're getting a lot of investors in the market right now, which we know is a lot of people are talking about corporations coming in and buying a bunch of property.
Yeah, I heard a statistic the other day that 1 in 7 houses that sell are investor purchases. That's kind of a lot, and it's a little bit alarming, and hopefully with the interest rates increasing a little bit, that will change a little bit. I hope, because we need more.
I don't know. I mean, if they're buying them for rentals, that's a good thing because we are very, very low, and the rental market is, I think, scarier than I feel worse for renters than I do for home buyers in this market.
Yeah.
So I don't know. We'll see. But bottom line, buyers, if you were pre-approved and you've been looking for the last few months and you have not talked to your lender about relooking at your numbers, it is a must. You have to go back to your lender and say, pre-approve me for between 5 and 6%, because it does make an effect on your payments. And sellers, we're watching this. We haven't seen a huge impact on the intense sellers market quite yet. I mean, maybe subtle in certain areas, but we'll be watching it. I think it's going to be a little bit more delayed, especially when you think of the still pent up demand that's out there, even with the higher interest rates. So let us know any questions. Remember to like and subscribe, and we will see you next week on our weekly update. Thank you so much.